Hello and welcome to our fourth web chat in our payment systems series, where we'll be discussing the Pan-European payment scheme, Request to Pay. We have two leading players in the payment industry from Deutsche Bank, who are the first bank to launch this Pan-European scheme. Edwin Hartog, Managing Director, Global Head of FinTech and Platform Sales. Welcome.
Thanks, Jack. Happy to be here.
And Benjamin Madjar, Managing Director, Corporate Bank, EMEA, Head Cash Management Structuring, and welcome to you too.
Thank you, Jack.
Now, we've broken this into three areas, this chat. The first area is the request to pay client experience. Now, Edwin, can you explain this? Because this is not easy to understand. There's quite a few concepts in here.
Yeah, sure, Jack. I think people should be most appealed to the title as the client experience. I think that is one of the most important things at this moment. And looking at the e-commerce segment or the online segment, I think this is very important. All the merchants are looking for a methodology where they get as many customers in and where they can route the customer through the whole chain up until the very end of an easy payment. And I think this is exactly where Request to Pay is all about. It's about making a smoothless payment at the end of the whole chain where the customer ordered, selected a product and wants to pay and is not offended by the fact that he is not able to make a payment or is not clear how to make a payment. The whole Request to Pay concept is based on the fact that at the end, the consumer will pay in his own banking environment, in his own trusted banking environment. So if we look at the scheme that is reflected here, you see the checkout, and then he will select a payment method, which is in this case here, Request to Pay, which can be relabeled to a merchant label payment methodology, if you like. Then, of course, the customer the first time have to provide his payment details, like his IBAN and his bank, but that will be all stored, i.e. in the second time when he's a replicating customer, that immediately pops up, and which is already a very good experience. Of course, to line up with the regulations, the customer has to authenticate himself, and that is exactly where the Request to Pay is so clever, because that payment he will assign for will be rerouted to his own bank environment, where he will, with a thumbprint or a photo pen, authenticate his payment, and then he feels comfortable about it, and the payment will immediately be sent out to the bank of the merchant at the end. So this is a whole smooth chain for payment, which is completely in line with all the new PSD2 regulations. And I think that is where a lot of merchants are looking at. And it will be pan-European. So it will be one methodology for the whole of Europe.
Is this for individual payments, or is it for multiple times that you can make the payment?
It could be for both. It's an individual payment, and as I said, when you're coming in again, it's very smooth to do that again immediately. Secondly, you can also have a subscription, for example, where you have to pay each month a same payment. So you can immediately authorize that for the whole chain of payments. However, at this moment, that's only if it's for the same amount every time. Currently, we're also working on the fact that you can deviate to that, but as you can imagine, it is slightly more complicated to have all checks and balances on that.
And the other question that arises from this schematic of the scheme is, how real time is it? Can you do this at the point of sale? In other words, you're standing at the counter.
For the moment, we made the choice to focus on e-commerce platforms to deliver a lean customer experience at that level, whether it is on a desktop or mobile. For point of sales, this is in our book of work for late 2020, but it's not yet available for the market.
And the third question really here is the reference field. Where does that come from? And will the merchant be surprised by it, or will he be expecting what is there?
So let's imagine that you are the merchant. The merchant has a lot of fields that they want to fill and make sure that they can track these fields for cash application reconciliation perspective, and also to issue the right invoice to the end customer. So they're going to have to be able to have 156 characters that they will send to us. So DB as a third-party provider, so the request to pay engine. And then what we're going to do, as we are connected to 6,000 banks in Europe, we are going to be able to initiate for the merchants a payment request, so a payment initiation, and we ask the customer to do that payments with these elements. And so the reference number will be carried on from the customer bank to the merchants, meaning that the same reference number will be received on the bank accounts for that same transaction, and it will be easily reconciliated with the initial payment request initiated from the merchant.
That changes the level of reconciliation enormously, doesn't it?
That's why this solution from an accounting and treasury perspective will be fantastic, and they will treasurers and head of and financial directors will love it because of that. It will be an easy way to match all the transaction with all the payments.
In a way, we've got into the key benefits, but looking at the key benefits for your business, how do you explain this? How do you present this?
I think we already elaborated on the enhanced reconciliation, I think, which is a fair and very clear benefit. But I think there are a number of other benefits as reflected here on the slide. And one of them, and which is also a very important one, I think, is the cost savings. As we all know, at this moment, we have all kinds of methodologies in the various countries, but some of them are very costly. For example, the credit card schemes are still charging a lot of interchange, which is not always favorable for the merchant, who takes most of those costs, if not all of those costs. And if you have a significant card flow, and there are many industries that are really driven by the far majority on the card flows, this could drastically reduce your costs or bring a lot of cost savings. Because the fact is that on this request to pay, we only charge for a fee which is far, far smaller and which is not a percentage for the payment for the transaction itself. So I think that from a, let's say, number crunching on a business case, you really see a substantial cost savings if you're talking about big volumes. And it's not only about cards as such, it could also be about certain payment methods that are in the country as preferred method. I think about, for example, Sofort in Germany, where we will be still significantly cheaper. So that, I think, is very important as well. I think real-time settlement is another very important benefit to the business. As we know, we are moving to more and more to an instant scheme. And this whole connection, and I think we can elaborate upon that in our last slide on the technical scheme, the whole connection with the banks is via APIs. And many of those banks are already locally connected to the real-time settlement or their instant payment scheme. If those APIs can support it as well, and we have a pan-European instant scheme, then all those payments, as we just discussed, will be instant, meaning that as soon as the customer authorizes payment, that payments will be in a couple of seconds with the merchant, and the merchant can delivering its goods, as well as that the consumer will see that his account is debited. So I think also that whole real-time settlement is very important. We already talked about the improved customer experience, and I think last but not least, one to mention is to reduce risk. And take, for example, a other use methodology, which is the direct debits, the SEPA direct debits. There you always have a long time ahead, about 58 days, that or 56 days, that a payment can still be revoked. Well, the payment as such, the request to pay, which is then an instant payment or a normal SEPA transfer, is irrevocable. And that reduces the risk a big time, because you will not have to wait all those days if a payment is revoked or not. It's simple settled, and if it's settled, it's done. So the merchant can be sure of his funds. I think those are, one of the biggest advantages. I don't know, Ben, if you want to add anything to that.
Just maybe two comments. One, from a customer standpoint, the customer experience is that you stay in the merchant environment and or you'll be redirected to your bank. So from a customer experience, you can initiate a payment in a very convenient manner. And then the second part is about the risk to the customers. The EBA and the European Commission, and so their guidelines in that respect, imposed some specific requirements in terms of connectivity with two specific certificates that allow a clear, very risk-averse connection between banks, and to make sure that they are well protected against the fraud, and the other element being also the two-factor authentication, which is now mandatory for all payments in Europe across all the payments solutions that exist.
The last point you make in this slide about availability, it's available in key markets and then continuous rollout. What does that mean? Can you give us more detail there?
So right now, the service is available in 7 European countries, including Germany, Netherlands, Finland, Austria, Spain, Italy, and Belgium. And so we are moving ahead in launching the service in other European countries, Euro countries first, and then will come also GBP and Swiss franc. And in the meantime, based also on our client requests, we have been launching and evaluating and launching the service in India and probably in other countries. So this is the rollout we are referring to.
Wow. But there's a big thing here that you're doing. You're going to have, I suspect, a huge impact on the card schemes because their charges, particularly with the ad valorem interchange, are quite considerably more than this. How are you going to manage this? How are the card schemes going to manage this? Or is this just going to be accepted?
Accepted from a customer standpoint, we are going to measure that in the next couple of days and weeks because we just launched the solution in the Netherlands. Accepted from the merchant perspective, we met with all major clients, all major corporates across the globe over the last 18 months because we have been working on that for a while now, and we are quite a front runner in that respect. So from a merchant perspective, we identified a lot of different use cases. How then it's going to be perceived by the competition, so the card scheme, but also potentially some of the wallet players? That is a good question. From what we see right now, all the key players in the payments area had been started to look into request to pay and all alternative ways to perform payments in the current regulatory environment. So in EU being our home region, and where the regulation has been imposing with PSD2 a lot of things over the last couple of months. And so we don't know yet exactly how the card schemes will be impacted by this new trend and this new payment solution. We only see that they are trying to react by doing other things as well.
Yeah, inevitably. But you were predicting in a research report, Deutsche Bank research report, the death of payment cards. I suspect it'll be some evolution rather than death. But anyway, we'll see. But talking more specifically, can you talk us through the technical workflow of request to pay? Because I've had quite a few questions on the original article in CTMfile about how this really works. Can you explain this? Ben, I'm assuming you're taking this.
If you wish. There's one underlying baseline, an element that we all need to consider, that this technical workflow is built upon APIs. So APIs with the merchants. so one API with one merchant, for example, that the other API is actually the API with all the European banks. So I mentioned 6,000 banks in Europe. So this is a very fundamental concept, which is because this is based on open banking and upon API connectivity, meaning a very fast flow of information between two organizations or a merchant and a bank. That flow, starting with you as the end customer, Jack, you want to purchase a ticket, and then actually online, you're going to click on, I want to pay with my bank account. So I want to pay with DB, request to pay. And at this point in time, the airline company, the merchants, the online shop will, with an API, send us a message saying that Jack Large wants to initiate a payment. And what we do, we're going to picture all the banks which are available for payments. So let's say that you have a bank account in Germany. As we are now connected to 1,800 banks in Germany, you select your bank. You then insert your login and password. So as you can do that for, let's say, some wallet providers or for e-banking, you then have a multiple capabilities offered to you depending on your bank, whether it is decoupled, whether it is embedded, whether it is redirect. I would take the two most widespread examples. Embedded is when you stay into the merchant environment. So it will be the picture of the merchant environment. And so the look and feel will be exactly as you stay on there on the merchant website. The redirect mode is actually you'll be redirected to your bank account, so to your e-banking. And that's in both cases, you enter your, as I said, your login and password. Then you actually select the bank account you want to pay with. And then at that moment, you receive a second factor authentication, meaning that you receive either a QR code or you receive an SMS code, a TAN code, as we can call that. And then you type in your 6 digits that you receive on your mobile to validate the payment. At the exact moment, DB, request to pay solution, will push a message back to the merchant saying the transaction from Jack is completed. You can issue the email of validation, you can issue a flight ticket, you can issue whatever. At that moment, you will receive an email saying transaction is confirmed. At the same time, your bank will initiate a bank transfer to the merchant bank accounts. Then if your bank is ready for instant payments, the merchant bank will receive the money in less than 10 seconds with, as you said before, the exact same payments reference, that was initially sent by the merchant to DB request to pay engine. And so this is where you complete your transaction.
That's a revolution.
We hope so.
Particularly if you're doing it in multiple countries with the same standard, so a multi-country merchant can just set up the same procedure across all the countries.
I agree with you. Maybe we can ask a Dutch representative, so Edwin, with a long-lasting experience of using similar solution in the Netherlands. But I guess that at the European level, that would make a big difference. Don't you think, Edwin?
Yes, indeed. And I was about to jump in indeed to say, Jack, you're right. This is a revolution, and I think this provides the possibility to have a single payment method over a lot, if not over the whole of Europe. I mean, at the end, it also, of course, comes down to the consumer and to the consumer mindset. Will they be willing to change to that new payment method? If you look in the Netherlands, indeed, and that is where Ben is referring to, we have Ideal, which is exactly as just described. So if I buy something, I select my bank, I provide my thumbprint on my iPhone, and the whole settlement is done within a couple of seconds. But Germany, France, Spain, Italy are not used per definition to this method yet. And we have to see if they indeed get the good feeling with this kind of payments instead of sending in a check or using a credit card method. That also will be depending on the, let's say, the efforts that the merchants will put in to kind of market these new payment methods. But at the end, and if you see a success rate in the Netherlands where I think over 60% is already paid via Ideal, this could indeed be a big game changer as well for the merchant as well as for the consumer.
Yes, and you're already going outside Europe, as you were mentioning earlier. Okay, so if you bring all this together and say, what are your key takeaways from this new pan-European scheme, what would be your key takeaway?
Well, I think I would like to end with the same words as I started, that the key takeaway on this whole new development is that this development provides the merchant with further upgrade his customer experience, which is, I think, a key takeaway for everyone. But besides that, the cost savings, the possibility of in the near future, the real-time settlement throughout Europe, and the reduced risk because it's an irrevocable payment, should bring a lot of benefits to the market. Not to speak about the reconciliation, as Ben discussed, which also brings a lot of benefits to the internal processes of the various parties. But most of all, it will all depend on the mindset of the customer, who is going to, or if he is willing to adapt this new payment system. And then we have a real revolution, because then we have a new payment methodology throughout the whole of Europe. Does that answer your question, Jack?
Yeah, it does. Ben, what's your slant on it?
I will say that this solution is an easy connector, so one API serves multiple countries. And as you said this is a revolution, a mix of regulation and technology that brings, a totally new approach towards payments and very easy manner that will please the treasurer, that will please the marketing and sales teams, that will please the payment heads in any of the corporates. And we acknowledge that in meeting with all these corporates. So that will be my takeaway. That's going to please a lot of professionals.
And that's actually my takeaway, that the maybe a revolution, but you've got to convince the consumers, and they are famously worldwide, famously conservative in terms of changing their payment usage. The younger people obviously change faster, but people are still clinging to checks. But if you bring all that together, what's the future of this new scheme? Because you're not just doing it in Europe, you've already mentioned India, and you must have other countries in line because you're present all over the world. What's the future of this scheme? Edwin, what do you see its future globally?
I think the future will be built upon in the next period, where we test it throughout Europe and also adapting it already to some other countries. And then I see you see a natural development. If there is indeed a change in mindset and the market is adopting the system, I think it will become very rapidly. Also driven by technology, as Ben already explained, the whole API technology behind it should make it a very fast and easy adaptable process, which definitely takes some time, as you already said, because the customer is very conservative. But I think we have seen also in the Netherlands that after a certain point in time, the market is willing to adapt and will adapt, and then will adapt very soon. And I think this would definitely also, giving the regulations and the instant payment schemes we are moving into as a society, this is definitely a future road of payments.
Thanks, guys. Absolutely fascinating. Really interesting.
Very welcome, Jack.
Thank you, Jack. A great pleasure. Thank you, Jack.